In this video, a lot has happened with Trump becoming president. Three main things. When it comes to immigration and visa law, Trump's introducing the golden visa. When it comes to tax, he's reintroducing 100% depreciation on real estate. And then when it finally comes to trade, he's introducing tariffs. So a lot is happening. And so what you want to do when you look at raising money, watch this webinar recording, which goes through step by step all the different things that are going on. And by the end of the video, you'll be well informed for those who even missed the webinar. We never record the webinars, but just for this one, I've sent this recording to you. And make sure you watch it all the way to the end to see how you can get value from it. And so I'll see you in the next one. Wichita. So it looks like everyone's joining. So, alrighty. So yeah, everybody. So basically, it's going to be really straightforward. And I'm actually not going to share any recording from this, but I will share the notes by the end of the call. So you're going to have the notes to this at the end of the call, and just take the things that are relevant to your situation. And this would just be a really basic and focused webinar. So first of all, who am I? What's my name? What are we doing? So just for context, so those who aren't familiar, my name is Nathan Myers. I run a company called Raises.com where we do two main things. First is preparing people's offerings. So let's say somebody wants to raise money to buy more real estate or buy a business. What we do is we help them do all the legal paperwork, the financial paperwork, and the marketing paperwork. And then the second thing we do is assist them in doing outreach to potential investors. So my name, so just quick backstory, I actually come from more of a, funny enough, a software background. I learned about, cryptocurrencies before they went, sort of on an upward trajectory before they launched, early 2014 and so on. And from there, I learned a lot about venture capital and capital raising because I saw that the biggest issue was getting people to raise money. From then, I joined with an investment bank in Canada, Toronto, and that's when I really learned about the ins and outs of proper regulation, capital raising, reaching out to investors and people, having calls with investors and raising money via investors. So what we're going to go through is really there are two parts here. There are two main changes in the world of Trump that I noticed. The first main change are the changes in the legal side of things, and then the changes on the financial side of things. So when it comes to the legal side of things, it's really important to understand that whoever wins the presidency appoints chairmen to government agencies and government branches, and the SEC in the United States of America, they're the ones who run the whole, investor regulation side of things. So they regulate investor, protection. And they handle all of that. So if you're raising money to buy a business or you're raising money to buy real estate, these people, the SEC enforces breaches in the law. So, if you go and then you promise an investor the wrong thing or you don't follow the rules from the SEC, then what can happen is you can get in serious trouble in the sense of them doing an investigation on you, doing enforcement and all this, to those who don't know. So who's this fellow here? So this fellow here, his name is Jay Clayton. And Trump actually appointed him to be the chair of the SEC for 4 years. So it's really important to know who's the boss of all these government agencies that affect you. So if you're raising money and then you're used to using hard money lenders or friends and family, and then you want to start reaching out to investors that are outside of your network, you're probably going to need to work with the SEC. So to follow the rules of the SEC. So let's look at the guys who run the SEC. Because if you look at the people that run the SEC, then we can understand how they tick and what rules they have. So we look at Jay Clayton, and he was in the SEC from 2016 to 2020. And as soon as Biden got elected, then this fellow here, this really tough looking fellow here, Gary Gensler, got appointed in 2020, and now everybody is saying, if you just read the news, he's on his way out. And welcome to the few people that joined. Just for context, what we're doing, we're just talking about how Trump winning the election is going to affect how people raise money. So this looking fellow here, he's the guy that Biden appointed to the SEC. So he's the boss of the people that make the rules about how you can find investors. It's pretty important if you want to raise money. So, now that he's out of the question because he's potentially out of the question, when Trump gets sworn in office, people are saying that, Jay Clayton may come back. And so why do we care about these two people? And how can this make us money? And how can this make us raise money? So I guess the main things, I just try to summarize some of the main things, and you'll get the notes if you just stick to the end. We'll share this Google Doc. But basically, in a nutshell, this fellow here, mainly he was a lawyer, and he was focused more on, protecting, mainstream investors somewhat. He had a focus on, private markets and public markets. So everybody here, for all I know, is mostly in private markets. People here are mostly focused on raising money, to buy, let's say, to buy businesses or real estate that are now in a public exchange, you know. And he was more focused on, like just general misconduct that can affect small retail investors. But the thing with Gary Gensler is he was far more strict, many people would argue, in the sense of all of his regulations. So, he literally created 40 different new regulatory rules since he got appointed by Biden. And really he's really more against the idea of cryptocurrency assets and strongly sanctioned a lot of companies in that sector. Another thing he did is there's a type of way of raising money called regulation crowdfunding. Two of the largest regulation crowdfunding lawsuits happened underneath Gary Gensler's administration. One company called WeFunder, they help people raise money. So let's say you want to raise money to buy real estate or raise money to buy a business. You can go out to the average Joe using something called regulation crowdfunding. The way that our company does it, we help people with our lawyers with something called Regulation D. But regulation crowdfunding means you can use the average Joe on the street who is smaller than an accredited investor, and you can get them to invest like $400, $1,000, $50,000, whatever, even if he may not be an accredited investor. So you can see just by the actions how these people are a bit different. So, what can you expect on the legal side of things, as Gary Gensler leaves and maybe Jay Clayton or somebody else that Trump appoints comes back? What you can probably expect is crypto deregulation. Again, for those who are into that, you can expect less sanctions, so softer rules on crowdfunding, and there's a lot more that I'm going to get into. But so far, I see a few people join. It's a pretty small chat today. It looks like Friday night, but feel free to type in the chat where you're from, what you're working on, if you'd like to network with anyone. And if you have any questions along the way, feel free to type them now, and I'm happy to address them one-on-one right here. So, what is something else that's pretty important is Project 2025 and Agenda 47. So Donald Trump, some people say that Donald Trump is doing something called Project 2025. But really, it wasn't Trump that was involved in making that. It was people who used to work for Trump who made that. I'm not sure why. I'm not sure of all the details. Everyone here can feel free to frankly share. But frankly, Trump's vision is Agenda 47. And Agenda 47 is a bit different because it's directly from Trump and it doesn't have all the details of the last Project 2025. So in any event, what is Trump going to do and how does this affect how you make money? And you want to make sure quite a few things here, and you want to make sure we go through all of these because we're going to talk about tax. We're going to talk about tax abroad, double taxation, and we're going to talk about the corporate tax and how all these things are going to play into raising money. So what's Trump going to change? People argue because so if you look here, Agenda 47 is directly from Donald Trump. But the issue with it is it's just a bunch of rhetoric talking about it's just him in a bunch of short videos because he isn't yet president. Again, he's just president elect. So he has to become president to start enforcing the things that he wants to do. So in the meanwhile, he just has these short videos with transcripts, which don't have crazy amounts of detail like Project 2025. But if we could look at people that work from Trump, what does Project 2025 say, if it's somewhat of a guide? What it says is they're looking at broadening the definition of an accredited investor. So an accredited investor is somebody who owns more than 1 million, who has a net worth of more than $1 million. So in other words, they have more than $1 million or more outside of their primary residence. So outside of the house they live in, they own one have more than $1 million, and that applies for with Canada as well. What he's looking to do is to create more rules that allow more people to identify as accredited investors. So right now there are a lot of rules like I mean, as I was working with an investment bank, really you're an accredited investor if you work at a financial institution or you're linked with a financial institution, or you do evaluation of the assets you own, then you have that accredited investor, tagline, or your spouse and you own more than $5 million, I believe, in assets, or I can't remember on the top of my head, or you make over $200,000 per year as an individual, etc. There may be more rules coming that will make more people accredited investors. So that's huge because it'll be easier to raise money because there'll be more people that you can raise money from, right? And then that's how it ties into the whole, quote unquote, make America great thing, quote unquote. So more people will be able to participate in reg deals. Next, really, people are going to, so Trump is going to put more of the onus, if anything, in Project 2025 is to believed or his past actions are to be believed. People are going to probably they're going to put more emphasis on the investor self-identifying as accredited investor. So instead of the government forcing the individual to enforcing you as a person who wants to raise money to start checking if the person is an accredited investor, what Trump may do is put some of the regulatory burden, all the burden, into getting the investor themselves to show you proof that they're accredited. So the purpose of this, and the whole idea with this, is that with the rights and a lot of the capitalist, libertarian way of doing things, it's to lower regulation, to lower government intervention, and to cause more, have more activity in capital markets. And the way that he's doing that is to allow investors to self-identify their status instead of you having to do all these regulatory things to bog you down. So now three, and everyone, if anyone has any question, feel free to type in the chat. But three, there may be more ways to exemptions from registration. So what's an exemption? Exemption is just saying there's an exception from needing to register. So if you have to, so registering just means you have to basically pay a lot of money and do a lot of hard things. If I were to keep my language really simple, you have to do a lot of difficult tasks in working with the SEC. And anyone who works with the SEC knows that you probably don't want to work with the SEC. It's not really a fun experience. It's a very serious, stressful, litigious experience usually, if especially if they're not happy with you. But long story short, they're going to make it easier to raise money without needing to register. So instead of Regulation D, you may not even need a Regulation D if you're raising tiny amounts of money. Like hypothetically, let's say 50K in the state of Florida. I mean, you may not, currently you probably don't even need to have any regulation, but they're going to reduce the need to use rules to raise money. So they're going to release some of that burden on all this registration stuff, or paperwork things, to keep language simple. And the last thing here, this is very important. So people that are in a business of raising money usually are told that they have to register with the SEC as a broker. So, the same way, if you find a debt broker, a hard money lender, you need to find a hard money lender to try to help you raise money and find a hard money lender, right? And then usually they broker the deal. Usually they're not really the lender. So same thing if you want to raise money to put money into the down payment of a deal, they're brokers for that, or brokers to help you raise equity. So equity is just the down payment money, or the money meaning that you're owning the company, as opposed to being a lender and lending money. So long story short, what's Trump going to change, and how will this make you make money and benefit? You're going to be able to find more companies that are not broker, that are not registered. So more people will be able to come and say, "Oh, I'll help you raise money." Instead of them only being brokers or having a lot of licenses or having a lot of lawyers and legal cost will go down, because as legal cost goes down, there'll be more people that'll be able to help you raise money. So basically, there'll be a bigger market for people that help people raise money, because the legal burden is going to go down in being allowed to help people raise money. So that's the fourth change based on Project 2025. Again, Project 2025 is not guaranteed to happen verbatim, but I mean, it's pretty much the people that worked with Trump last time. And Agenda 47, he doesn't even address all this stuff. He addresses more immigration, as he always does. Fixing, saving America from the bad guys and all this usual rhetoric. So But when it comes to how this will affect raising money, let's just look at his past actions of who he hired last time. For those who just joined, Trump is going to change capital markets by probably rehiring the last guy who works at the SEC, which is the agency that regulates raising money in the United States of America. Currently, we have this fellow here, this tough looking fellow called Gary Gensler, who is more strict than Jay Clayton. So, last thing is the finance. So, how does this affect people when it comes to, you know, preparing the offering, when it comes to tax? So there are a lot of changes here, and I'm going to move through them pretty quickly. But because remember, if you stay to the end, we're going to give you this whole, this whole quick little document. We're not sharing this recording of the call because some of these things, you don't want this recording going around for legal purposes. So what Trump is going to potentially do here is he's going to lower the corporate tax rate from 20, by 1 percentage point. So not that much. But the key thing is for companies that create goods in the US, it's going to go down to 15%. So the whole America First rhetoric, it's going to apply if you raise money to buy a business. Let's say you raise money to buy a business, you raise money to buy a real estate. What's going to happen is instead of it being, I got an interesting message here. So instead of it being really complicated, it's going to be really easy and tax would be way lower if you do all of your business in the United States of America, especially like let's say you want to buy a manufacturing company. You want to raise money, work with our lawyers, buy like a company that creates goods. It's going to be cheaper and the profit will be higher if those goods are only made in America. Potentially, it depends on the type of goods. So these are the things you want to look for. If you're in cars, I mean, you're just going to have more write-offs for car loans. Overtime pay. If you hire people, he's going to remove tax on overtime pay. So that's interesting, and it maybe it'll be easier to find people that want to work for your companies that you acquire much more. There'll be less taxes on benefits, less double. So here's really important. So for those who are in Canada, if you want to if you want to own an American asset and you don't live in America, for the few that are Canadian, there's going to be elimination of double taxation. So right now, it's really complicated to own assets in America if you're not in America. You may get double taxed. So Trump just wants to remove that so that more people invest in America. So if you want to buy a business in America and you don't live in America, it may be easier. You know, so just you can just see the pattern here, right? No taxes on tips, as he always says, and there are going to be high tariffs on imported goods. So if you're looking to buy a business where all the goods are off grid, and you can feel free to type questions now. I see people are talking. So what's going to happen is it's going to be way harder to buy businesses that depend on overseas goods and services because the tax will go higher and you may make less profit. So you're going to have to change the type of businesses that you want to raise money for to buy. All right. So let's see here. So QQQ, I'm having issues with irrevocable trust with IRS. Da, 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 da. Family just passed away. Now it's this much million, 20%, cost us this much capital gains. Any insight you can provide or our lawsuits in trying to remove this rule would be much appreciated. This isn't even the law. So, I mean, yeah, this is a tough one. We do have a lot of, we do have a lot of, tax account, well, new accountants that joined the team because before we just had CFAs, now we have accountants. So, Gail, feel free to just book a call. Pushing back in China. Yeah, feel free to just book a call. We have somebody that's more that's new to the team. He's called Ken, and we can link you up potentially with a tax advisor that is more experienced in that. Because I frankly I don't have any tax license or anything. Yeah, no worries. Trump is pushing back in China and them taking over the yeah. Well, exactly right. They're totally changing. So I mean, pretty much. So the main idea here, and feel free to start asking questions. I'm going to leave the floor open for a few moments for everyone to ask questions, and I see that Gail's probably going off to book a call. So if anyone has any questions, the main idea and what did we really discuss? So the first thing here is it's really important to know that if you want to raise money to acquire assets, whoever's involved in running the country of the United States of America is whoever is involved is going to hugely determine if you're going to be successful in doing this and if you know a game plan in doing this. I can't even begin to talk about all the complexity of this, but what you need to do is to just be prepared. So one, know that if you want to raise money to buy businesses, or real estate, understand that basically Trump is going to appoint somebody that lowers regulation. When you lower regulation, it'll be easier to do business. Trump is going to enforce rules that make it easier to buy businesses that are built in America, that are made for American goods and services in general. And then Trump in general is going to lower taxes, slightly, and make it easier for people um, that are focused on America first. The problem is if you focus on businesses that don't depend on America, or if you're in a business that depends on a lot of paperwork and a lot of jargon and a lot of complexity, all the need for all these lawyers is going to definitely go down in general. There's still going to be enforcement, but it's going to go way down. So it'll be easier to buy a business with less regulation. So in general, capital markets should start to speed up here. Does he? Yeah. So Gail, yeah, we're just going to send over the slides like in a couple of minutes. How does the raise and payback work for buying a business? So how does the raise and payback work? I'll try to answer the question, Mark. But oh yeah, okay. So I remember that we just signed you up a while ago. And nice to chat with you. And yeah, let's get you on the support side of it so we can get your game plan going. Because Mark just is a new client. So the way that the raise works is what we do is really there are two steps, right? So one is the setup and then the raise. The way that the raise works. So the setup is just like, the paperwork. And I can divulge into all the details, but I don't want to bore everybody here. We have a smaller crowd. So our lawyers prepare paperwork. And then the second thing is intros and outreach. So we do introductions to some who we deem a good fit, for funding your deal. It's a tight network, but it's a small, tight network of people that we know who can fund your deal. So, because Mark, for instance, he wants to acquire more real estate with other people's money. After we do the paperwork, we then introduce them to investors. And then we do outreach to people that are outside of our network. So, just so we use, all the new tools, AI and all this stuff, just digital marketing, so we can consistently book appointments. And Sareem says, does the same apply to the Canadian, more Americans? But the only thing that applies to Canadians is if you're in Canada and you want to raise money and things like that. Most of the investors are in the U.S. Honestly, most of them are in the U.S. So like I'm like the U.S. has most of the investors, most of the venture capital. There's also going to be no double taxation based on his plan. He's going to remove double taxation, and if that's good for you, then that means you can set up a business and own business in the US without getting double taxed. So, that's pretty much the goal. And what we can do next is you will leave the floor open for more questions. I see another booking. Oops, there's some background noise.
Hello?
Yeah, how's it going?
Can you hear me? Hey, no, Nacho, I just want to say this was one of the best presentations I've ever attended. I've attended quite a few events about capital raising, and especially with like the current political state and what's going on in the U.S. and everything. And I really just want to say thank you so much for the way you've explained everything today. And I will absolutely be booking a call, and I will absolutely be working with you. So thank you again. And anyone else, I would highly encourage you to book this call, Natu and his team. So I'll be doing that, and I look forward to working with you soon. I'm going to be a client of yours. You can count on that.
Yeah, no worries, and there's no rush or anything, because I mean a lot of this stuff is really and thanks, background noise. Thanks, Sareem. And a lot of these things are really complex, right? Because I see Gail as well is also asking again, you're looking to create a fund to purchase multiple properties in the US. You have 41 years of commercial RE/broker/investor experience. Who do I contact to get more information on a program? Also, do you fully comply with the SEC 506B and 506C regulations? Yeah, exactly. So yeah, just that link, raise.com/talk, so then just this link and then we'll link you up. It's the same process. So then compliant, yeah, we totally do, because the idea is what we do is we usually do the Regulation D 506C. All right. We can do 506B. And for those who don't know, Regulation D 506C is a regulation that allows you to raise money from accredited investors theoretically an unlimited amount of capital. So yeah, what we do is we have a lawyer actually that works at the SEC, and she's really good. I think she moved over and she has her own firm because, frankly, I think the new administration was kind of bogging her down. So she works at the SEC, and what she does is she sits down and creates the PPM just so that when the investors read the offering, they feel confident about moving forward because it looks like the similar offerings that are typically on the market. The issue is that if there's something off about the paperwork, about the PPM, or the subscription agreements, then it can raise a red flag. And obviously, you don't want any enforcement or anything, but yeah, usually it's a PPM, the subscription agreement, the LPA. These are all the documents that are usually needed. So cool. I see Sarin just booked a call, and I see a few people are booked a call as well. So tell you what, folks, we can end on a high note, and just feel free to just book a call for a free consultation. There'll be no like you just make a game plan one on one, no push to buy anything. Oops, just get a call. And the main idea is, oh, the chat function is not copyable. Yeah, I don't know why that happens. So you have a question based on one of the points of the email, relaxing finder rules. Oh yeah, last thing, let me share the Google Doc. Forgot to share that. So let me share this Google Doc with all of you, just so you'll be able to see this. So in the chat, and I know you said the chat isn't copied, I'll try to fix this. But anyway, yeah, just in the chat, you'll see the Google Doc. So if you just click on the Google Doc, I'm not sharing this anywhere else. We're not sharing this anywhere else or anything. So if you just click on the Google Doc, you'll get access to this document, and you can use it to do some research and everything. So okay, so Nick, you had a question based on one of the points of the email. Da, 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 da. Okay, so I'll try to explain it, but what's the specific question? Because all this means is if somebody wants to find an investor for you, so let's say you want to raise money to buy real estate, you can get like somebody can find an investor for you in exchange for a percent of the money raised, i.e., a success fee. The issue with doing this is that the SEC hates this. Like they really they hate it. Um, Click to open in a browser and it works good. Yeah, the SEC hates finder's fees for people that are not registered with the SEC as a broker. So if you're not a broker and you try to, help people raise money in exchange for a commission, the SEC hates it. So what this guy is potentially looking at doing, he wants to make it easier for people that are not registered to find investors for you in exchange for a commission. And so that's why it's going to be easier to raise more money. So we are in an introducing. Okay, yeah. So that's just what you're saying. Okay, so you know the business. So Nick, you know the business, right? So it looks like you're in the business. So that's basically what I'm saying is that basically you have some competitors basically here, but they obviously wouldn't be probably as good as you because you're a proper broker and everything. You're a proper broker dealer firm, so you won't have as much competition in the sense of people being as good as you, but the barrier to entry will go down. So you're going to probably have some like high school kids and some rubbish, come and say, hey, I'll help you raise money online, and they'll have like a digital marketing company and say, hey, I can get you investors online, and it'll probably be like 19 years old. Yeah, that's all I mean. So, all right. So I see a few more people join. So looks like we're just winding it down. Anyone ask any more questions? This is just a quick Q&A. We can start winding it down because I know it's Friday night. So I'll put the Google Doc in the chat again, and I'll put the link for a one-on-one consultation again, and a free consultation before we go. But yeah, to everyone who just joined, because I see a few people joined before we close, two things. One is that Trump is in office pretty soon, and he's going to make some changes. He's going to reduce the regulation needed to raise money, and you're going to need to be able to, you're going to have to find a way to take advantage of it. He will lower tax, especially tax on businesses that do most of their business in manufacturing in the US. So if you own a business or a piece of real estate that has most of its activities in the US, you'll make some more profit because the taxes will go down. That's one thing. Another thing is there'll be less regulation against, you know, there are less regulations, so less crazy rules, less hoops to jump through. Things would generally require less lawyers. So that would be good. Less lawyers, less enforcement. So then those are the main things we discussed. And yeah, I think we might as well just end on a high note. It's a pretty small group, so we just end on a high note. And so I'll give you a few more minutes, just a few more seconds to ask any final questions. But we got like I think 5 people that booked a call. But um, anything else, I'm always here. And this has been raises.com. Any final questions before we go for now? Cool. I think that may be it for now. So listen, everybody, it's been a great pleasure. I don't see any more questions. It's been a great pleasure. Just make sure that you click on the Google Doc that I put in the chat because we're not sharing this recording or anything. And I thank everybody with your time and everything. Oh, you're not a broker dealer, but a real estate broker. So what you're saying is we can bring in investors without issues. It's a bit tricky. Like you have a real estate license so that people can buy the real estate. So that's fine. But like let's say you want to get a bunch of investors to mix their money together, or you want to get a bunch of investors to partner with you, it's a bit gray. So it's a bit of a risky area in your own fund or syndication. You can do it in your own fund or syndication, totally, but you have to do it properly with the SEC rules. It's the same thing as what Trump says, quote unquote. Like just imagine what because we're talking about Trump. You know how Trump says, "I'm not against immigration. I'm against people immigrating the wrong way." That's the rhetoric. So the same thing with, you know, the SEC is not against you raising money in your own fund. They're just against you doing it the wrong way. So yeah, you can do it. You just need to use the rules of the SEC. And yeah, it has to be your own. You have to be an issuer. So it has to be on your own fund. Like you can't go to your brother's fund or you can't make a business on raising money for other people unless you know a lot of lawyers and a lot of brokers. But in general, you're fine. So to answer your question, you're fine. You just have to use a 506c and then you should be good to go. So, all right. So I think that's pretty much it. So folks, I wish you a great Friday evening. Stay blessed, everybody. And we're going to do a lot of these ones, and we'll see you next time. Cheers. If this webinar provided some value to you, make sure that you go right below and then you book a call with raises.com. And with us, we'll just walk through step by step how you can use the different aspects of the timely news with presidency in your capital raise to buy businesses or to buy real estate. So make sure you book the call. We'll talk to you one-on-one, complimentary, and see if it works for your situation. And so we'll speak to you really soon.